taxes. And we at ET now understand that the tax code or the tax regime could be changed. It could be simplification, there could be changes in terms of tax rate, there could be standard changes in terms of standard deduction. That's a big exclusive, and that has been a big exclusive on ET now, and Prakash has got details on that.
Yes, we are learning from our sources that the government is likely to hike capital expenditure target by 10 to 12% for FY26 in the upcoming budget. We are given to understand that the various factors will be taken into account before moving ahead. In fact, the government will take a rational approach before deciding the final Capex numbers. Sources are indicating that the slow spending in the current fiscal year is something which will be taken into consideration. In fact, as per the government estimate, actual capital expenditure in the current financial year will cross roughly 90% against the overall target of 11.11 lakh crore on back of higher spending in the second half of the current financial year. In fact, the government is also hopeful that the overall spending will increase during last quarter of the current financial year. In addition to that, key infrastructure sectors like railways, road transport and highways, housing may get higher 10 to 15% higher allocation. In addition to that, market borrowing is something which will be taken into consideration while deciding these numbers and make a better balance between fiscal prudence and capital expenditure. Market borrowings through dated securities likely to rise in FY26 to fulfill repayment obligation, and therefore government will of course try to make a better balance between fiscal prudence and capital expenditure numbers. But of course, sources are indicating that the government will not deviate from the fiscal prudence roadmap. In fact, fiscal deficit target of below 4.5% for FY26 will be maintained. The stage is all set for the Union budget for the financial year 2026. We are learning from our sources that the Finance Minister is likely to take several measures to boost domestic consumption. In fact, consumption-led growth is something which is on the government's agenda, and therefore several measures are likely to be announced. We are given to understand that the government is likely to provide relief to the taxpayers and middle class, where some reduction in taxes along with tax rationalization could be made. In addition to that, what we are also learning from our sources that the government may provide tax relief to the taxpayers, where tax exemption limit along with all benefit may be increased to rupees 10 lakh. Where a standard deduction limit, which is at rupees 75,000 at this point of time, could be increased to rupees 1 lakh. Sources are also indicating that the relief is also expected in the rupees 3 lakh to 7 lakh tax category under new tax regime, where basic exemption limit could be increased beyond rupees 3 lakh. A very significant development coming in. In addition to that, sources are also suggesting that the Finance Minister may unveil, a revamped Income Tax Act in the budget to undertake language simplification, process simplification and removal of redundant laws.
If you like this video, then like, share and subscribe to ET Now.